In this video, I'll be sharing my predictions of the 2023 real estate market in the Peel region. I say Peel region, but let's be honest, these stats apply to most of Ontario. Stick around till the end for my biggest prediction. Then I'll share my year-end overview of how we did in 2022. This is Chandra from the Chandra Real Estate Group, and we run a successful team of agents here in the Greater Toronto area. If you're thinking of buying, selling, or investing here in the GTA, feel free to click on the link below and book a call with me directly for a free one-on-one real estate chat about your goals in 2023. First prediction of 2023, interest rates won't drop and will likely stay high for a while. We've had low interest rates for too long, and that was just not sustainable. We've already had a supply and demand issue for the longest time. Then you add more immigrants to the mix and leave the interest rates low. That was just a recipe for sky-high real estate prices. Here's an article from the Toronto Star that states that we won't see a drop in interest rates in the near future. If we dig deeper, we can see that it also says the good news is we won't see a rise by much in 2023 in the interest rates either. This means people will start adapting to the new interest rates and sales will start rising up once again this year. Prediction number 2, supply may stay low. Since the pandemic in 2020, we haven't been able to build as many homes due to construction delays, high construction material costs, and fighting inflation every day. On the flip side, the immigration rate hasn't slowed down, increasing demand in an already unbalanced market. As we can see in this Toronto Sun article, GTA prices are caught between high interest rates and low supply. And when we dig deeper into this article, we could see that we're actually fighting high borrowing costs, but on the flip side, also fighting high immigration rates. Prediction number 3, foreign buyers being banned in 2023 won't have an effect in real estate prices. Vancouver implemented this rule well before us, and we know what that did in their market. Not much. Besides, most of the buyers in our market are permanent residents, local citizens, or investors thinking of relocating within the city. If a small portion of these buyers, being foreign buyers, are taken out of the market, it won't affect the prices by a whole lot. Prediction number 4, headlines are going to look scary. We've had too many rate increases in 2022, creating a lot of uncertainty in the market. It's hard to budget for a home when you're constantly hit with rate hikes every couple of weeks. Our year-over-year average prices will look low in the next few months, and that's primarily because we would be comparing with early 2022 when the interest rates were super low. We've entered a new phase in real estate where the interest rates are high and buyers will start to adapt to it. In the meantime, the headlines may scare you saying prices have dropped and real estate is slow, when in reality, it could be quite the opposite. When evaluating prices in this time of the market, it's crucial to look at month-over-month prices than year-over-year, because last February, before the first rate hike, the prices were wild. This means we'd be evaluating properties on their short-term growth than long-term. If a property is appreciating despite the interest rate hikes, that's a good sign that it's performing well. Prediction number 5, rental rates will cool off. 2022 was the year of landlords. Rents had skyrocketed because people chose to rent than to battle it out with high interest rates trying to buy. I think sales will start to increase slowly towards the second half of the year, causing the rental rates to stabilize. With that said, let's take a quick glance at the Peel region 2022 real estate market. I'm going to cover 4 points to give you a full scope of the health of the market: sales, average price, list to sale ratio, and days on market. The first point, sales. It's evident we've had a slow year in real estate with so many interest rate hikes. We've had a total of 40% less sales in 2022 than the previous. As you can see in this graph here, winter has always been a slow time in the market. However, we had a shockingly amount of low sales in December. And this is what I mean by misleading data that the media will take advantage of. Our sales have dropped, but our average prices have not. And to add to that, when we look at the sales in 2021 versus 2022, we can see that people have just chosen not to sell their homes, and sales have always just stood low for the entire second half of 2022. Average price. Average prices have also dropped since cost of borrowing went up. notice the prices haven't dropped past 2021 prices. In the last 10 years, prices went up on average 6 to 8% every year consistently. Then the pandemic hit and prices shot up by 24% in 2020 because of low supply. This type of growth just didn't make sense. The government had to intervene by increasing interest rates. However, even with the interest rates being raised, the year-to-date average prices are still up 11% in 2022. The year-to-date sales are a compilation of all the sales in 2022, and if we compare that with 2021, we're actually still up 11%. This means we had a low amount of sales, but amongst those sales, the average price was still higher than 2021. Imagine what would happen if the interest rates weren't raised. We'd have some sort of a housing crisis for sure. I think we're back to sustainable appreciation and somewhat of a healthier market at this time. However, it's too soon to say anything until we see the next few months' data. One thing is for sure, unlike the previous years where it was hard to advise our clients because homes were selling for 10-15% over asking price, we're now seeing less competition, more negotiations, and conditions in offers. Days on market. If we look at the last 4 years, we can see that the average time it takes to sell a property hasn't changed by much. It still takes on average less than 2 weeks to sell a property. Another sign of a low supply, high demand market. If what the media and people say is true and we're heading for a recession, it would have taken much longer to sell a property in 2022. Ask to sell ratio. If there's one good thing that came out of this market, it is that homes are actually selling for the prices they're listed at. Unlike the previous years where buyers are blindsided into putting in an offer well over asking, negotiations are now back and buyers are in more control. Overall, I think we're going to enter a stable market with higher sales, but average prices may hover or slightly increase in 2023. That's enough of me rambling about the real estate market. What are your thoughts? Do you think the prices will drop in 2023? Comment below. Until next time, we provide results that move you.